Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Monday, 24th November, and this is your London Open Brief. Risk appetite is steadier to start the week as hopes for a Federal Reserve rate cut lift global equities, while energy markets sit on edge with mixed headlines around Russia and Ukraine and fresh sanctions. Across the global picture, Asia finished mostly higher, and Europe is set to follow, with sentiment buoyed by growing expectations the Fed cuts rates next. Fed funds pricing now assigns a strong chance to a quarter-point move, a shift that has eased last week's risk sell-off and given the euro a tailwind against the dollar. Futures suggest tech could participate, but the tone is measured rather than exuberant. That caution stems from how the week ended. Despite headline-grabbing earnings from an AI bellwether, some investors are scrutinizing the quality of growth and inventories, and major U.S. companies. Indices are hovering near closely watched moving averages. Crypto weakness added to the risk-off feel. For now, the mood has calmed, but the message is that the coast isn't entirely clear. On geopolitics and commodities, reports of progress in Russia-Ukraine peace discussions are keeping oil sensitive, with both benchmarks having lost roughly 3% last week. At the same time, new U.S. sanctions on Russian majors have left a sizable volume of crude stranded at sea, a dynamic that could flip the narrative if prices start to rise. In Europe, debate continues over the effectiveness of the oil price cap, underscoring that the sanctions regime is still evolving. Meanwhile, Chinese firms are pivoting in Africa from megaprojects to consumer goods as exports to the continent jump, a sign of shifting trade patterns. In Asia's policy mix, the Japanese yen remains under pressure on fiscal concerns and uncertainty about the Bank of Japan's path, though the possibility of intervention lingers in the background. Tensions between China and Japan have spilled into travel, with a surge in flight cancellations after recent political remarks, a reminder that geopolitics can hit services trade quickly. Turning to markets, the dollar is mixed but softer against the euro, with euro-dollar trading above 1.15 on rising Fed cut bets and a cautious read on the European Central Bank supporting the single currency elsewhere. Euro-Canada is firmer, while dollar Swiss continues to grind higher, even as Swiss officials signal a steady stance. Dollar Canada is subdued as the greenback eases, and the Australian dollar is steady ahead of a key inflation update this week. Gold and silver are under pressure with a more upbeat risk tone and a firm dollar in places, while crude stays finely balanced between peace talk headlines and sanctions effects. Looking ahead, the near-term calendar is light, with U.S. producer prices due Tuesday. The rest of the week picks up, with a Reserve Bank of New Zealand decision, the U.K. budget, and inflation readings from Australia and Tokyo, alongside U.S. retail sales. I'll be watching euro-dollar, looking for an uptrend to hold if Fed cut expectations stay firm. Dollar-yen bears watching for a continued uptrend given yen softness, but any hint of intervention could flip that quickly. Brent and West Texas oil could drift lower on peace talk headlines, yet sanctions-driven supply frictions are a clear swing factor. I'll also keep an eye on Aussie-US around the inflation print, and dollar Swiss for follow-through if the Swiss stance remains cautiously steady. The takeaway: markets are cautiously constructive, but still headline-driven and sensitive to policy expectations. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.